There are a lot of people out there that are going to try to convince you that you can utilize Index Universal Life for infinite banking, and the reality is nothing could be further from the truth. In this video, what I'm going to do is I'm going to talk about what is infinite banking ultimately. I'm going to try to simplify it for you, but I'm also going to show you why, in fact, whole life insurance is the product that has to be utilized when implementing and executing infinite banking in your own life. There is no substitute. It has to be a properly designed and specially engineered whole life insurance policy. So I'm going to get into that. So if you haven't already, make sure you subscribe and hit the bell. That way you're notified every time I launch a new video, because I got videos like this coming out every single day. Let's go. Hey, what's going on, Cashflow hackers? It's Chris with Life 180, and this video is going to be fun. We're going to be talking about whole life insurance and infinite banking and why the two are married together, why you cannot utilize Index Universal Life for infinite banking. And I'm not going to talk as much about why you can't use Index Universal Life. I'm going to talk more about why it has to be whole life insurance. Of course, a lot of people always say, Chris, why do you spend so much time bashing on IUL? It's because ultimately, you know, they're the ones in it's the Coke versus the Pepsi. It's the Niners versus the Cowboys in the 90s when I was growing up. It's just like they kind of go hand in hand together. And so in this video, that's what we're going to be talking about. Here's the deal. This is what it comes down to. I think where Index Universal Life goes wrong and where people get confused about what infinite banking is when they think about infinite banking simply being a conversation about positive arbitrage. So the idea here is people think, okay, if infinite banking is about positive arbitrage, then what they do is they kind of gravitate towards Index Universal Life, and they say, well, if I could borrow money at, like, say 5% and I could participate in the index and earn up to 8%, well, then that looks really good, right? I have the potential for positive arbitrage, and that's what infinite banking is all about. And so therefore, that's a better mousetrap than whole life insurance, which doesn't offer that high of a potential positive arbitrage. And so therefore, that looks really sexy on paper. And because of the fact that AG 49A, the regulation, allows for 50 basis points of positive arbitrage inside of an IUL illustration, it illustrates really well, but the reality is life doesn't exist on a spreadsheet or an illustration. They'll never perform that way. And that's why it always will leave you kind of wanting for more if you go the IUL route. Now, the reason that I say that and I start with that is because of the fact that infinite banking is not about positive arbitrage at all. It's not. That's not what it's about. Now, can you get positive arbitrage inside of infinite banking? 100% yes, you can. Will you get positive arbitrage immediately? No, you won't. It's a long-term strategy, and you got to understand that it's a long-term game. And what I'm going to do in this video is really try to help you understand what that looks like and to be able to decipher if it's the right decision for you. I always kind of break it down like this. Infinite banking is simply a philosophy. And, you know, a lot of people have started to politicize it. You know, there's a lot of libertarian leaning people that really like it, the idea of separating yourself from the bank. And listen, in a time like today where banks are failing with SVB going out and, you know, Jamie Dimon from Morgan Stanley basically saying that he thinks, you know, 100 plus more banks may fail this year. There's a lot of things going on and a lot of uncertainty of the economy, of the stock market, of the real estate market, with inflation, with the debt and the unfunded liabilities, and the way that banks are kind of exposed right now because of our market environment. Stagflation is creeping in. So a lot of people are worried about the banks and they're trying to create their own system. And a lot of infinite banking proponents are trying to like sensationalize and hype the value of getting into infinite banking. Now, don't get me wrong, it's very tempting for a creator to go out and do that. I'm very tempted to go out and do that. And I may make some videos on the value of utilizing you know, your infinite banking policy as a banking alternative, considering the variables that we have going on in the economy right now. But I just refuse to get like hypey about it. I don't want to sensationalize anything. What I look at this is the principles never change, and if you look at the way that whole life insurance companies work as a whole, their number one job is to mitigate risk. Their number one job is to get you the best returns possible with the least risk possible, period. That's it. And so what does that mean? That means they're not going to get you these crazy returns. They're not going to get you massive double-digit returns inside of your policy on a year-to-year basis unless we run into a situation where it's like the 1980s and fixed rates are up in the double digits, right? Like that is what it is. They're going to beat inflation from a long-term perspective, and it's going to be a place for your safe, liquid, accessible capital to be able to go into, to be able to have like a savings account, but a savings account on steroids. It's going to get about a 20 to 30x return on your savings account, typically over time, over history. Right now, you can look around, and the environment's changed a little bit. So you got to understand that from a long-term game, this is simply a filter that you run your decisions through when it comes to your finances. You build the foundation of your financial life on a product that's going to beat inflation, that's going to give you guarantees, guaranteed growth. It's going to give you other benefits that are going to protect your life in a lot of ways, and access to that capital for real estate investment, for business investment, for other cash flow investment opportunities. It is what it is. Like, it's just a filter that you run your decisions through, right? It's that simple. It's not complicated. Now, I'm a big believer, and this is one of the reasons I love it so much, is because a lot of the reasons that people struggle with their money is because they're not taking full responsibility of the results in their financial life. And when you look at it that way and you say, okay, what do you mean by that, Chris? Well, I say, well, think about it. In 2008 and 2020, when the pandemic happened, most people that lost their money, they had their money with a financial advisor or in some account that they didn't understand. They didn't know where their money was allocated. They didn't know where their assets were. And they lost a bunch of money, and maybe they lost their job and they had to tap into that money and they had to liquidate negatively performing assets, and they took a decade of positive growth and they lost a lot of it. And the reason they did that is because they were not engaged and involved with their personal finances. They didn't have the right financial structure. They didn't have their financial foundation built on safety and guarantees. And, you know, because I've done a video called the Financial Pyramid, the Life 180 Pyramid. I'll link it up here if you want to check it out. It's definitely a concept that you need to understand if you want to be able to create more wealth with more predictability and less risk. I'm a big believer of going through your decision-making processes thinking, what's the upside, what's the downside, and can I live with the downside? If you can live with the downside in any investment, no matter what, then it's a good investment for you. But if you can't live with the downside, ultimately all you do is you put yourself in a position where you become a speculator, and speculators can get massacred, period. That's it. But you are always a speculator unless you build your financial foundation. So therefore, why do we need to utilize whole life insurance? Okay, well, whole life insurance, to me, and this is one of the things that I always love to say to people, is it's the only financial tool when leveraged properly. It's going to make sure what you want to happen will happen when you want it to happen, whether you're here to see it or not. It's that simple, right? And so by utilizing a whole life insurance policy instead of a bank, instead of a savings account, you're getting your dollars to perform more than one function for you. Now, this is the deal. What are we looking for inside of infinite banking? Let's take a step back and think about what is the philosophy. And I kind of talked about this at the beginning a little bit, but I think it's important to reaffirm here, is that you are, for infinite banking, you utilize it in a couple ways. You want it for emergency fund. If you believe fundamentally and philosophically that you need to have an emergency fund, the next question is, well, where's the best place to keep my emergency fund? That is inside of a properly designed whole life insurance policy. Once you get your emergency fund up, you have the ability to leverage that policy for infinite banking purposes. I think the biggest key here to understand is that you're never implementing infinite banking right out of the gate. You're not private banking right out of the gate. What you're doing is you're saving money. You're building your financial foundation. You are not able to implement infinite banking until you have that pool of money, that foundation built strong enough and big enough, and when you have that happen, then opportunity will find you. It will track you down. You'll have access to this capital when time is needed to be able to access it, and you can leverage it at that point in time. And when you have the opportunity to borrow against it and to leverage it, or that money opens up more flexibility for you to get access to more money, then you are actually implementing, quote unquote, infinite banking, right? But at the end of the day, starting a policy, you're not an infinite banker. You just are building your financial foundation, right? And so what I love about this is it helps you build your financial foundation. It helps you become more so you can live the life that you want to live. Listen, the reason you are where you are right now in life and with your money is because of who you are in your life and with your money. So to think that you're going to accomplish more and go out, and all of a sudden, if you haven't done it yet, you're gonna go out and you're gonna have this real estate portfolio, you're gonna build these big businesses, you're gonna do all this stuff. Listen, I honor the fact that you wanna go do that. I think it's amazing that you're gonna try and go out and do all these things, and I encourage you to do so. But the problem with that is you are not who you need to be right now to have the success that you're looking for. And that's nothing to be ashamed of. That's nothing to be scared of. You're gonna grow into that. But you have to grow with your money. You have to, and the reason I love this system is because by putting your money in a whole life insurance policy, it forces you to become more. It forces you to improve your relationship with money. It forces you to improve your discipline. And when you look at that, you never want to take risk inside of the insurance policy. You never want to take risk inside of that asset. You want to have that asset be a foundational component of your life, and then you want to take risks in other things like real estate, in other things like business. And that's where you take your risk, not inside of the policy. And so therefore, what we look about is not, okay, is IUL better or whole life better? No, let's think about the attributes of the policy. Let's think about where the risks are in the policy. And let's think about what do you need for attributes to be in place for infinite banking to be able to work. And when you get to that place, what happens is you realize there's a couple things that you need. You need liquidity, you need control, and you need guarantees of your money. Those are like three of the, and there's more to that, but those are three of the foundational components that you need to have when you're implementing infinite banking. You need liquidity. Let's talk about this. You need liquidity. Now, most whole life policies, if you design them properly, you may not be fully liquid. You're not going to be fully liquid right out of the gate. Once again, I've done a lot of videos on this. You're talking about doing this over a long period of time. If you could be completely liquid, dollars in and dollars available to you by year 5 or 6, that's a pretty good situation to be in, because after year 5 or 6 and beyond, it's a savings account on steroids. It's going to be massive leverage. It's going to have all your money working for you. Listen, you can't make short-term decisions to solve long-term needs. And that's one of the reasons I think infinite banking and utilizing a properly designed whole life insurance policy can solve so many problems for so many people, because it forces you to think long-term. It's our minds, it's our philosophies, it's the way we think about behaving, the way we've been trained about this like microwave mindset about needing what we need right now that's holding people back. It's keeping you a slave to the system. And by thinking long-term, by enabling yourself to kind of think outside of the box, not think like everybody else, and think about the fact like, all right, I'm willing to give up a little liquidity. I'm willing to pay the price to participate in this system for the long-term matter, for the long-term objective, then that's what this is all about. But you have to buy into that. If you don't buy into that philosophy, this is just not right for you. It's just not, right? And it's important to understand that, because otherwise you're just going to be trying to jam a square peg into a round hole. It's just not going to work. It's just not. And so you need that, but at the same time, here's what I'll say. You need that liquidity. You may not have 100% liquidity in the first couple of years, but you will have some liquidity, and that liquidity is leverageable. The reason, and I'm going to do this for a second, I'm going to compare whole life to index universal life, is that by apples to apples design, whole life insurance is going to be more liquid because there are less surrender charges than there are with index universal life. Now, I know there's a lot of people out there that are going to say, oh, you can do riders to eliminate the surrender charges and all this stuff. Guess what? They're not going to do that. And the people that do, I'm telling you right now, there's other risks that go along with IUL that go into it. And that gets me into number 2 here, which is control. You want to control your money. I'm a big believer that the control is not just about the money inside of the policy. The control is about the moving parts of the account of that policy. When you sign on the dotted line of a whole life insurance policy, the life insurance company is completely obligated to meet their obligations of the policy for you. For you. You are basically a shareholder of the company, and the insurance company has to meet the obligations to you. You are in control of the policy as a policyholder with a whole life insurance policy. With an index universal life policy, the opposite is true. When you sign on the dotted line, you basically say, all right, this is kind of what I think it's going to be, but the insurance company, and the reason that the illustrations for an IUL is about 3 times as long as a whole life policy is because of the fact that all the legal jargon in there is basically the insurance company saying, hey, we know this looks like this way right now, but by the way, we can change all these fees, we can change all these admin charges. By the way, all the performance may go down. And by the way, there's a good chance if you borrow against your policy, you're gonna put it at significant chance of lapse. Like all these different things. That is not you being in control. That is the life insurance company being in control. So from an infinite banking perspective, fundamentally speaking, you cannot use Index Universal Life because you don't have the control of that policy that you need to have. Once again, this is not about positive arbitrage. This is about control. This is about a system. It's about a philosophy. It's about a filter that you run every financial decision that you make in your life through to make sure that it's going to get you where you want to be, and you can run it through that filter of what's the upside, what's the downside, can I live with the downside, period. You got to make that decision when you're looking to buy the policy, IUL versus whole life, and then every time you go to utilize and leverage it with a policy loan, or you look to back up a bank loan with the policy loan, or anything of that nature with the cash value in your policy, whatever it is, that is a process that I really encourage everybody to go through, because when you do, I think what you're going to realize is, wow, Chris, you are 100% right. And then the last thing I would say is just the guaranteed component of it. And I'm touching on it right now, but it's that guaranteed, what's the upside, what's the downside, can I live with the downside? Worst case scenario, I can look at the guarantees in a whole life policy in over a 20-year period, it's gonna be the bank account. That's worst case scenario. Worst case scenario. Now, and that's assuming that the company doesn't pay a dividend at all for 20 years. And these companies that we work with have never missed a year for 130 years. So when I look at the downside with a whole life policy, I can look at it and compare it to a bank account and be very, very confident that I'm winning, and I'm winning by a large margin. When I look at Index Universal Life and I look at the guarantees inside of there, and I look at the lapse rates, and I look at all the moving parts of the policy and how bad it could go, to me, once again, I reverse that out and I go, okay, I don't have the liquidity short term because of the surrender charges, and then I don't have the control, and I look at the guarantees and they're not very good, and that's just not what it needs to be. It's not where it needs to be for me to be comfortable. And at the end of the day, I look at this, and when I say, all right, I want infinite banking, I want to implement infinite banking in my life. I want to implement infinite banking because of the fact that I'm looking to open up more opportunity. I'm looking to have a better financial foundation of my life. I want to be able to access opportunity that most people don't, because the only way you do that is by having access to capital when other people don't, period. And with whole life insurance, you can do that. Now, some people would argue you could do that with Index Universal Life, but there's so many variables inside of an IUL policy that take that potential away from you. And I've done a lot of videos on this. I think IULs are the most misrepresented product, in the industry. Because they just don't do what people say they're going to do for you. But at the end of the day, especially with infinite banking, it needs to be a properly designed whole life insurance policy. If you have any questions at all, comment in the comment section below. You feel free to email Chris at Life180. If you have any questions, I'm happy to engage with you one-on-one directly, especially more complicated products or questions about design and products and personal situations. I do not give personal advice on the channel here in the comments, but more generic things, I'm happy to engage. If you haven't already, make sure you subscribe and hit the bell. That way you're notified every time I launch a new video. And hopefully you found value in this one. Till next time, have a blessed, inspirational day. We'll talk soon.